So if I got paid in crypto this week for some work that I did and I don't sell it for 5 years, that's not going on my tax return for 5 years.
It will go once you sell the cryptocurrency.
Okay. Hiya, thank you very much for joining me again today. I wanted to pick your brains about something a little bit different and something which is a bit new. A few of our clients got surprised this year when they had tax to pay when they usually wouldn't. And it's those that had got involved with cryptocurrency, and some are done quite handsomely, and of Bitcoin and some of these others. Some of them certainly weren't anticipating the IRS to take a little chunk of their profits, or a bit more than a little, I should say. Can you tell us a little bit about how the IRS deals with cryptocurrency profits and things like that?
Sure. It's actually one of the really common questions we usually get from many clients, especially that nowadays cryptocurrency is sort of famous now for people to invest in. So to start with, basically the definition of it is considered a capital asset, which means, for example, if I want to have a cryptocurrency, I will open an account and I will put in some money to buy the cryptocurrency. And the value of the cryptocurrency might go up or down, but then when I sell the cryptocurrency, I will recognize a gain. And that gain is considered to be taxable on the US tax return. One of the maybe difficult things for taxpayers to find out is always the cost basis. We advise our clients to always keep track of the amount they invest, which will go towards the cost basis of the cryptocurrency, and as well the date, because the date is really important because it will set in later the holding period of the cryptocurrency.
So I've got a question then, which I think might complicate matters a little more. You know, if you're based in UK, Canada, Australia, Middle East, and you're dealing in a different currency, let's say, you know, I open a cryptocurrency brokerage account in Australia and I put 10,000 Australian dollars into it. Then I buy some crypto and then I sell some crypto and hopefully I've made some money. So my account now has 15,000 Australian dollars in there. When we do the exchange rate to US dollars, it's not all just on the date of sale, right? We've got to look at when we put the $10,000 in on the day we opened the account.
Absolutely.
And what the rate was on that date. But then look at the date and the exchange rate when we sold the investment. So there could be a gain or a loss on the exchange rate as well as just the crypto, right?
Correct. It may be a lengthy process to figure out the cost basis, the spot exchange rate. The same will apply for the sale price as well, sale date and the exchange. Another thing to add, Clark, is sometimes you might actually get paid through cryptocurrency instead of real currency. And in this scenario, the question is, how do you know how much is your income and how much should go on your tax return? So when you get paid through cryptocurrency, we look at the date you received the cryptocurrency in. It is not the date where you perform the services. We see this sometimes, this confusion happens. So for example, if I worked on Tuesday, and I received my cryptocurrency on Friday, then Friday should be the date that we recognize the cryptocurrency.
So Aya, quick question then. What if I'm buying your services and I'm paying you in crypto and I've got to do a US tax return too? So I pay you on the Friday for the service that you've done for me. So I'm selling the crypto.
In this case, what happens basically is you as a US person, you're disposing your cryptocurrency and giving it to me, which means you are going to recognize either a gain or a loss. And the same will apply to self-employed people.
So I got another question then. If I'm receiving the crypto for payment for services, but I don't sell it until next year, when does it go on my tax return?
So basically, Clark, the profit or the income is recognized when you dispose the asset, when you sell it.
So if I got paid in crypto this week for some work that I did and I don't sell it for 5 years, that's not going on my tax return for 5 years.
It will go once you sell the cryptocurrency. And one important thing, what as well, I had a question from one of the clients is that, so let's say you dispose of an asset, but you keep it in your account or wallet. You
Mhm.
don't take the money out.
Back into, say, real currency like US dollars or something
Exactly.
like that.
Yes, and that's still considered a taxable event.
Of course it would be, yeah. That makes
Yes.
sense to me. That's like buying some stock. You sell the stock. Just because you leave the money in your brokerage account, it doesn't mean you haven't got the profit, right? It's the
Exactly.
same thing.
Yes, that's
Okay, I
correct.
understand. So, Aya, you mentioned that crypto is treated, or the profits of crypto trading are treated as capital gain. But then you brought up something interesting about what if you're getting paid in crypto for services? So let's say, for instance, I might be a contractor, self-employed, and I go and do a month's worth of work for you. Usually you might pay me $3,000 for that. But then this time you say to me, would you like to be paid in cash or crypto? If I get paid in crypto and do that month's worth of work, is that still going to be capital gain, or is that going to go on my tax return as earned income?
Yeah, that's different. So when you earn cryptocurrency in return of performing certain services, it's considered just like employment income or self-employment income,
Okay.
depends on the situation. And usually that's recognized as ordinary income
Okay.
and taxed on your tax return accordingly.
So does that mean that if I got paid the equivalent in Bitcoin of $5,000 and it goes on my tax return, am I going to be able to get the foreign earned income exclusion on that income or a foreign tax credit?
As long as it qualifies, then that shouldn't be a problem.
Okay, terrific.
Yeah.
Okay, so if someone's out there and they're being offered to be paid in crypto versus cash, as far as their US tax goes, there's not really much difference.
The difference is really the date or the value of when
Yeah,
they receive it.
the date they get it. Okay.
Yeah.
But if they're trading for profit and hopefully not loss, but if they're trading it, that's different, right? That's all
Yes.
capital gain. And you don't have to put it on your tax return until you sell the coin, whichever one you've got.
Yes.
Aya, so the question I've got now for you is, in my scenario, I bought $10,000 worth of Bitcoin. I've sold it. I've now got $15,000 Australian in my account. So I've made $5,000, which is terrific. If the ATO or the Australian Tax Office are going to charge me some capital gains tax on that $5,000 I've made, can I use an FTC? If anyone doesn't know what that is, it's a foreign tax credit. Can I get a passive foreign tax credit for what I've paid to the ATO and use that to offset maybe the tax that I'd have to pay to the IRS?
Yes. Yes, you can.
Okay, terrific.
Yeah.
So the only time really I'll have to pay full capital gains tax to the IRS is if, say, for instance, the ATO or some other tax office around the world didn't charge capital gains tax on that profit. You wouldn't have an FTC then, right?
Yes.
Okay, so I guess my last question for you is,
Sure.
let's say I'm living in a country where there are no capital gains tax. I've made my $5,000 and then you're going to pop that on my tax return. How much tax am I actually going to have to pay the IRS?
That really depends on the holding period, Clark. So usually it could be either short term, which is going to be taxed at marginal tax brackets, depending on your level of income, or it could be long term capital gains at a maximum of 20%.
So what's the time difference between a short term and long term hold?
Usually it's a year.
Okay, so
1 year.
if I was earning a lot of money, and let's say I'd held my crypto for, let's say, 11 months, it would be smart, wouldn't it, for me to hold my crypto for an extra month so I cross the 12-month period. So now it becomes a long-term capital gain, and I'm only going to pay 20%. Because if I'm a high-income earner, I might be in the 40% tax bracket, and if I sell them at 11 months, I'm going to pay 40% on my profit, right? So people have to look at that.
Yeah, absolutely something to consider. I cannot tell you at the moment if yes, it's good or a bad thing to do, depending on your tax situation. So it's best to check with a tax consultant.
Cool. So you can work it all out for someone, right? You can look at how much income have you made? When are you trading the crypto?
Yes.
And if they haven't, really, the best time for them to get in touch with you is before they've sold the crypto, right? Because that's what matters. It's when you sell it.
Absolutely.
So people do need to be very conscious about this 12-month rule, because otherwise they might end up paying a lot more tax on the profit they've made than if they just held it for a little bit longer and crossed over that 12-month boundary?
Yes, absolutely.
I had an interesting situation a couple of months ago with a client's 2020 tax return. She'd actually received some crypto from her partner. They're not married, but she received a gift of quite a lot of cryptocurrency. And her partner had actually bought it years and years ago when it was really cheap. And obviously it's not cheap anymore. It's very expensive. So she's received this gift. Now, since she's received the gift, the price of the crypto hasn't changed a great deal. So she hasn't actually made a great deal of profit based on when she got it and received to her. But I don't think that matters, right, on the US tax side when she sells it.
Usually we look at the partner's or the donor's holding period, and that will automatically become her holding period.
Got it. So it is going to be worked out on the price that he paid for it 5 years ago.
Yes.
When she eventually sells it, because she sold a little bit in 2020, which is why it ended up going on her tax return. But she was quite surprised because she was like, well, you know, when he gave it to me, it was worth $20,000. And now when I sold it, it's worth $22,000. So she thought she only made $2,000. But in reality, when we did her tax return, she'd actually made about $17,000. So she was getting a much higher tax bill than she anticipated. But I guess that's just important for people to remember, right? It's not the date that you receive it, it's the date that the original purchaser purchased it. This happens right when people inherit properties as well, like usually from parents, and they sell it and then they get this huge capital gains bill because it's all based on when their parents bought the property. And that could have been, who knows, 50 years ago. And obviously property in most places has gone up considerably in that time. Yeah, that's an important thing for people to remember. So, Aya, we've talked about a lot today and you've been super helpful. Maybe we do a quick summary. So if you're kind of trading Bitcoin or any type of crypto, the tax event happens when you sell it and you've made a profit or a loss. If you're still holding it, it doesn't really matter until you sell. But if you're getting paid in crypto for employment services, then it's actually the day you get the crypto. It's got nothing to do with when you sell it. It's just the day you get it. Okay.
And it's ordinary income.
Yeah, so that hopefully can be covered if you're eligible. It can be covered by the foreign earned income exclusion or a foreign tax credit, but it's when you get it. Nothing to do with when you sell the Bitcoin or the crypto in that case. But similarly, if you are trading it and you've just done it for investment, then obviously you could be on the hook for capital gains tax. If you're paying capital gains already in the country that you're in, you may be able to take a foreign tax credit for that, and that will help. Otherwise, the IRS is coming after some of your profits, right?
Yep.
Aya, you've been wonderful as usual. If someone wants to get your help, how can they do that?
They can join our Facebook help group or go to our website. It's Expat Tax Online, and they could just send us an email and we're happy to help them.